The country is hoping that a substantial amount of money it needs to fund its $28 billion budget for the next fiscal year will actually come from tax revenues and, in effect, turning it away from its chronic dependence on oil revenues due to falling prices. But with a tax-to-GDP ratio of just 6%, Nigeria is ranked among the lowest tax-collecting nations in the world. The country, though, is looking to raise that ratio to about 15% of GDP. The government's efforts to ramp up tax collection do face significant roadblocks, partly in the form of tax dodgers, but it has announced a tax amnesty plan for tax dodgers to pay up arrears of unpaid taxes without any penalty. It's also leveraging on technology to drive its tax collection initiative. Nigeria aims to raise about $3 billion or so in value-added tax and company income tax alone in 2018, while also ramping up other income lines like taxes from pay-as-you-earn. Right then, so let's dig a little deeper, though, into the debt funding side of Nigeria's 2018 budget. Deji Badmus is live in Lagos tonight. Deji, good to see you. So let's start with this debt service business. It used to take up 23% of government revenues in 2013. By end June, that was well over 38%. Why did Nigeria rely so heavily on expensive short-term debt?
Well, Rama, quite difficult to tell, but I think that the reason will simply be because, you know, these short-term debts are very easy to access. We're talking about domestic debts now in this case, very easy to get. All you just need to do is, you know, issue treasury bills or bonds and what have you. So, and then you also have to consider the fact that getting these long-term external debts now are very difficult because usually those debts will be tied most times they're tied to specific projects and the conditions are usually very stringent. But in the case of Nigeria, over the past 4 years or so, most of the borrowing that Nigeria did locally, it basically used to pay salaries, not even to carry out projects. You know, the states are owing, they are beginning to get out of it now, but for the past 3-4 years, it's been a very tough one for states in this country. It's been a tough one too for the federal government. So for them to be able to pay salaries, they've had to resort to some of these short-term debts now to solve some of these problems and not really carry out projects. So I think the easy access to these short-term debts, of course, made it quite, if you like, you know, quite interesting now because they are easily accessible, you know, so people, you know, state governments and of course the federal government rushed in and took so much. All
right then, but Moody's arguing about 10 days ago that the impact of this debt refinancing plan that we're now seeing from the Finance Minister, Kemede Oshun, will be, and I'm using the words here, slow to materialize. Let's assume, for argument's sake, that the roadshow she's on now will be successful. What will Nigeria's debt service profile look like next year?
Well, the debt service cost for 2016, next year for 2018 now, what the government targets, looking at the 2018 budget now, it's somewhere in the region of $6 billion, so to speak. As we speak today, a total debt profile of the country is in the region of, well, in the region of 20 trillion. That would be somewhere around $55 billion. What the government is planning to do is to reduce, because about 77% or so of the entire debt profile is domestic, and what the government is trying to do is to push up the external side of the debt, and it's targeting that by 2019 the external borrowing now, the size will be somewhere around 40%, and then domestic will be somewhere around 60%. But give or take, in terms of the debt service cost for the 2018 budget, well, somewhere around $6 billion, Rama.
All right, one last question for you, Deji. So the country aims to raise about $5.5 billion all in through Eurobonds. But walk us through the numbers here. Is there an option for green shoe here? What sort of interest rate is the finance minister willing to take for the fund managers who might be watching this and saying, yeah, Nigeria might be a good place to actually park a few $1 billion in?
Well, the numbers are not out yet, but from what we have heard and from when Mrs. Adeosun, for instance, appeared before senators when they were actually debating over whether or not to approve the budget, she said, well, I mean the debt now, the bond, I should say, she basically said, well, that the tenure would be between 5 to 30 years and that that the government does not expect that the interest rate will be more than 7%. So we're looking at between 6 and 7%, but we do not have the figures yet. They are not out. And of course, a maturity tenure of between 5 and 30 years, maybe 10 years, between 10 and 20 years. We just have to wait to find out. But one thing I must quickly add, Rama, is that, you know, the problem with Nigeria's debt is that it's not the debt to revenue, I mean, the debt to GDP ratio now. It's actually the debt service to revenue ratio. Fact is that the government has not been making as much money as it should, and that's the reason why, for instance, the IMF has been concerned and said, well, that Nigeria's debt is not sustainable, because when you look at the debt to service ratio, it says it's around, the debt service now to revenue ratio, it says it's around 68%. That's quite huge. So what the government is trying to do now is to ramp up revenue. You talked about taxes. The government is hoping that you'd be able to get more people to pay taxes, you know, move the tax to GDP ratio now from 6% to 15% next year. Of course, that's an ambitious target, but the government says it will use technology, and it's also investing so much in other non-oil sources, using, you know, earnings from the oil sector now to develop the non-oil sector, hoping that money will be able to come in now from those sources. It's quite tough, no doubt, but the government says it aims to generate so much revenue next year, so that it could reduce the cost of borrowing.
Indeed. We'll leave it there for the time being. Thank you for the update. That, of course, is Deji Badmus there live in Lagos.